Hello and welcome to another MCO market update on Ethereum. So we are dealing with the Ethereum chart here on the daily time frame, and the price has reacted to the so-called weak support zone down there. We can still call the dip, it's more a crash that occurred, a three-wave move down in a fourth wave. And that fifth wave to the upside would then start from, well, was supposed to start already a while ago. So ideally, this fifth wave to the upside is now unfolding. And if this fifth wave is really unfolding, then it should take us to, well, above the third wave high that formed around $4,120. Ideally, even above these previous highs from 2021. So we talk about the $5,000 plus region. However, if you follow my videos already for a while, then you know that the idea is that the move to the upside is likely going to be only an ABC structure combination, which means it's going to be quite messy, and also we might not be able to trust it at all due to the deep pullback in the wave 4. So all I want to say is I'm still looking for higher prices. I've never given up on the bullish potential for Ethereum, but I've always said that we need a reversal confirmation in order to be a little bit more optimistic. So we don't really have a formal confirmation yet that Ethereum has bottomed in a fourth wave, but I am already tracking it as if we've bottomed. So I will tell you now on the smaller time frame which levels are important, what are the next targets, and what you need to watch out for, ideally also as we are heading into the weekend and prepare then also for the next trading week, because I want to share with you the structure and what we need to see for a formal confirmation that really that low that formed here on the 7th or 8th of April is indeed a substantial low. Now, if we track the move to the upside, we are tracking here a three-wave move up. So wave 1, wave 2 is already done. Yeah, the initial so-called 1-2 setup. That means there was a setup for a third wave. I mean, this wasn't very clear. The market just moved sideways here, and the confirmation, the first confirmation that we could get that we are aiming for $1,925 was a break above this line, located at around $1,687. So price broke above it. That was our confirmation that we are starting the third wave to the upside. A third wave should normally reach the 138% extension. These are just Fibonacci extension targets based on our model. We know that a third wave should get there. There's no guarantee, but we know it should get there. So Ethereum is overall quite weak, also compared to Bitcoin at the moment. Still, that's still the case. So I don't have high hopes here, but it is still the preferred scenario, especially as long as the market is holding above this support zone I called out on the chart. It is between $1,680 and $1,759. From here, a fifth wave to the upside would ideally unfold to $1,925 plus. From there then, once we have completed the third wave, we want to see another 4-5 pattern. And if these 5 waves form, we actually have a 5-wave move. And that would be a formal confirmation that a lasting low has been established. That's not a guarantee, it's the first confirmation. Then the pullback, which could be in wave B, could actually be a formal pullback setup, which could then be used to find an entry in a defined area. We cannot define that yet, but we will probably define that over the next 1 or 2 weeks. And then a C-wave rally can start from there towards 2,500 plus. That's how I see Ethereum at the moment, really diving into the microstructures. I mean, it is possible that we are currently working here on a third wave internally of wave 5 of C. Any break below the Friday low that formed here at around 1,741, the intraday low could indicate an early failure and will shift the focus back to Fibonacci support at $1,680. That's the update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.